Good evening. Thank you for coming to join myself and John-Paul Tancona from Bank of America here for this seminar on preparing for divorce, tips for organizing your finances and investments. Just a few reminders that we're going to tell you. If you go to the next slide, John-Paul. There's you're all muted. We have a Q&A. The presentation is recorded and you'll get a copy of it after the webinar. So if you look at the bottom of your screen, there's a little Q&A box. You can put questions in there. As we go through, I will keep my eye on those questions and I will certainly, ask them and John-Paul and I will answer them. So don't worry about timing. We will make sure that we have time to answer some of those questions. So I am Carolyn Daly. I am the chair of the Family Law Department at Cohen Seglius, and I am speaking with John-Paul Tancona, who is a certified divorce financial analyst with Merrill Lynch, Bank of America, as you can see behind him. And what is a certified divorce financial analyst? Well, John-Paul is going to tell us a little bit about that, but it is a special, it's a special, not criteria. Thank you. It's a special designation for financial planners that allows them to provide advice that is specific to people going through a divorce. There's much more to it, but that's a brief idea of it. And John-Paul has been doing this for a number of years, and he's determined that he is going to work with people in this space in order to assist them in making this process much better, much more straightforward, much more streamlined, and to have better information available to your attorneys, which is one of the reasons we thought to have this webinar together so that we make this process work better for you. So John-Paul, with that, I'm going to let you take it away and I'll interrupt you, as I said, as from time to time, and we'll see where we go.
Thank you, Carolyn, for the introduction. Good evening, everyone. Thank you for logging in tonight. So as Carolyn said, my name is John-Paul Tancona, and I'm a certified divorce financial analyst with Merrill Lynch, Bank of America. 99% of you have no idea what a certified divorce financial analyst is. Carolyn just explained a little bit. Simply put, it's four fancy words that translates into what I do is I examine and analyze the financial issues at hand. Excuse me. We provide our clients and attorneys with data to help them achieve more equitable settlements. Through the analysis process, we're trained to walk clients through all these different financial implications of divorce, develop a realistic picture as they transition into a new lifestyle, so to speak. So, as Carol mentioned, we're here to help you prepare if this is the situation that you're going through. Let's face it, divorce it's stressful, it's messy, it's often chaotic. The goal for this seminar it's to educate and empower you and to safeguard what's most important. I know Carolyn and I have seen our share of divorces end up in financial disasters because clients did not prepare properly. They neglected to have detailed information for their attorneys and financial experts like myself, leaving them more exposed to less than adequate settlements. Being prepared before the divorce happens is so crucial for the success of your settlement. And that's why we're here tonight, right?
Yes.
So,
and John-Paul, how do you help people do that in terms of gathering the information that they're going to provide to you or working with them? How does that relationship work? What is it, how do you work with a client in order to assist them in this regard in a divorce arena?
Sure. Thank you for asking that. The basis around all of it is, first, and we'll go into it a little bit on the next slide. We have to create a budget, right? We have to know what's going on financially as of today. What do you own? What do you owe? All of these different aspects, we sit and we kind of go through what your finances look like today. And okay, this is unfortunate that it's happening to you. You're going through divorce. What is it going to look like in the future? My job is to financially prepare my clients for the reality of one income, right? Or, things of that nature. So we sit down, we put our heads together, and we try and come up with a game plan with the finances at hand. With working with an attorney like you, Carolyn, we figure out, okay, what is the settlement possibly going to look like? We go through all these different types of scenarios, and I'll run like a personal wealth analysis for my clients with all the information at hand. And you'll tell me, hey, JP, this is going to be the probability. My client's going to keep the house, but their spouse is going to keep this, and I'm going to try and figure out what is the best way to go about that. Present them that scenario, and different types of scenarios where maybe they didn't get 100% of what you were looking for. Maybe it's 75% of the value of the house, and things like that.
Okay, appreciate it.
Okay. So my clients, they share the same concerns. Am I going to be okay financially today? And am I going to be financially okay in the future? What you should be doing is breaking up your financial situation into 4 categories, essentially, and collecting documents for your attorney and for your financial advisor. Those 4 categories are going to be your assets, liabilities, your income, and expenses. Let's start with the assets. So assets have a way of disappearing after divorce proceedings begin, right? I know Carolyn's seen that before. As soon as the divorce becomes a possibility, you should start by listing what assets you think you own. Is cash, checking, savings accounts, retirement accounts like your 401ks or IRAs, pensions. There's also non-retirement accounts. Maybe you own mutual funds or stocks or CDs, annuities, life insurance policies. These are all things that most people probably have, but maybe they don't know that they actually have them. Maybe they're, your spouse owns them, and they're not exactly sure what they own or where they own them. So it's very important that on the onset of these possibilities of a divorce, start doing your homework. You start educating yourself on, hey, what do I actually own?
So can we pause there? So when we're talking about when we're talking about the assets, so sometimes you have people who are not really the person who's been involved in the finances or is going to have ready access. So this is sort of a 2-part. One of the things that you are going to want to do, whether you are the person who's handled the finances or the person who has not handled the finances, is make a list, right? Make a list of these items that you believe that you've either seen a statement or there have been discussions about. We have an account at Fidelity. And then from my perspective as the attorney, I like to tell clients, start getting me the documents. You may not be able to get them. You may not have a statement for that Fidelity account, but you know that there's a Fidelity account. So make a note. I have a Fidelity account. I don't have access to a statement. We own a house. Get me the deed. Get me a current mortgage statement. If you have an appraisal, get one. Go to Zillow. It's not going to be admissible in court, but it'll get you an idea of what the value of that house is so that you can start doing that. I try to suggest to clients that if you can do it on a Microsoft Word document or do it in a spreadsheet and say, this is the asset, this is the value of the asset, this is the liability against the asset, if there is one, and maybe the date, and then attach a statement that supports that analysis. And so you do that for a real estate. You can do that for bank accounts. If you have access to statements for bank accounts, get statements for 9/30, 6/30, 5/1, pick a date and get a statement from that bank account as close to when the divorce starts for each account, and get that to your attorney as a starting point. Same thing for investment accounts, right? Like a Fidelity account, or maybe it's a TD Ameritrade, or maybe it's which I don't even think exists anymore. I think that's now Charles Schwab, but whatever you're looking at. The other thing that I tell clients is that if you're trying to be a detective for yourself to figure out where there might be assets and you don't know where maybe they are, look at a tax return. Take your tax returns to your CDFA, because they can look at those documents and they might be able to identify assets you don't even know that you own because there's been no real discussion. Or maybe it's been a spinoff from another asset that you had that you didn't even know occurred. Retirement plans, same thing. Very important to do this early on in the case. Oftentimes, as attorneys, these are things that end up being done late in the case. And that's a problem because we don't have time to do the investigation that you really need to have done to determine what you're properly entitled to. And so things like, yes, it's great. Give me the pension statement, give me a 401k statement, but please get me the plan document. It's called a summary plan description. Get me a model form of Quadro if your company provides one. And if it doesn't, call your husband or your wife's HR department. They may be able to give it to you, or it may be right online. If you Google it, Johnson and Johnson model Quadro, you might actually find it. So date of hire, date of entry into the plan, these are all really important things for work to be done in advance. Don't wait until the end to do your Quadros. It happens 95% of the time in matrimonial cases. It's a problem, and so those are things and statements that you can get to me and to the financial planner that's going to help us create a better argument for your behalf or do a better analysis of what is going on. Anything I missed, John-Paul?
No, those are good points. One thing I would say is also your health insurance. If one of the spouses
Yes.
is a non-working spouse, right? You need to notify your spouse's, the working spouse's employer that you're getting a divorce within 60 days, I believe. Otherwise, you will not be eligible for COBRA. Right. So that's the health insurance that, that will be subsidized by the employer. If you don't let them know that that's going on and the 60-day window, which I believe it's 60 days, goes by, you're not going to have that subsidy. Yeah. So that's also very important.
Right. And that's following the judgment. But premaritally, what you can do is find out what the COBRA costs are. Call HR, ask them. That's a question they get all the time. So call them, find out what the costs of the insurance are. Is COBRA available? How much will COBRA cost? What is the cost for the family? What is the cost for just a single person? That way you can figure out what the costs are for the children. And you may find that the COBRA is more expensive than if you got yourself a private plan. So if you're talking to a CDFA, they know people that they can send you to talk to about health insurance post-divorce and what those costs might be. They may have a better plan for you that is not what COBRA is, so you may not even want COBRA.
Right.
But, one of the things that you want to know about is all of the costs, what is available. And we left out, I'm sorry, John-Paul, we left out life insurance, same thing, pull the policies.
Yeah.
If there are trusts, if you have wills, pull your wills. If there are trusts that have been established, whether life insurance trusts for the benefit of the children or the other spouse, whatever trust you may have created, or if there are trusts that maybe your spouse created or is the beneficiary of, and there's a document somewhere and you can get access to it, get access to it. But even if you can't, tell the financial planner, tell me that there's a trust involved so that we know that we've got to go get it because there are issues involved with that. So, getting your ducks in a row and being able to have this information available and have a CDFA on your side is really helpful. So liabilities, what do we have in liabilities, John-Paul?
So liabilities, right? Do you have credit cards or student loans? Are your cars leased? Are they financed? How much do you owe on your mortgage? What's the rate on your mortgage? What are the monthly payments? What are your taxes? These are all liabilities. Do you have a lien on your home, right? Or a home equity line of credit that you have? These are all things that you need to know what you owe for, Carolyn to do her job, for myself or another CDFA professional to do their job. It's so important to be prepared for these, to have this knowledge.
Right, because if someone doesn't tell you, sorry, John-Paul, someone doesn't tell you. No, but if someone doesn't tell you about a liability, they've just forgotten because it wasn't a big deal. They have a student loan. They didn't even think about it because they just assumed it was their obligation. Or their parents loaned the money, loaned the family money. and it's going to be paid back. Well, I don't know about it. I can't help you with it. John-Paul can't run it through an analysis that will tell you where you're going to be because he doesn't know about it. And some of the things, maybe if you're leasing a car, it makes sense to go turn in and get a lower lease. Maybe it makes sense to pay off the loan on the car so that that's gone. Those are not things as a lawyer I might, because I function a little differently, but I'm not something that most lawyers are going to tell you. You want someone to say to you, hey, okay, I see all these liabilities. Maybe from a financial health standpoint, we should refinance that house and take some money out to pay down some debt because we'll get a better rate there. Or maybe we should turn the car in and get a car that's less expensive and get rid of the loan. Maybe we should pay off the loan because it's at such a high interest rate. And now we're going to have support obligations and we don't need that to tie everything down. Those are analyses that are critical to be done, but they're not done typically by your lawyers. Right, John-Paul?
Yeah, that's important. And, it's also important just circling back a second
Yeah.
on the assets, because you brought up liabilities, and an asset, you may not know that your name is on the deed, or, you may not know that, you may have co-signed for the mortgage. I mean, it happens where, you just forget that 15 years ago, you co-signed for something. Guess what? If your spouse is responsible for making the payments after the post decree is issued and they declare bankruptcy, guess who they're coming after? They're coming after you, right? Because either your name's on the deed or you co-sign the mortgage. You're next in line. So just be careful from what you owe standpoint to how it can make an asset really turn into a liability if your spouse is not being responsible with his or her bills.
And one of the other things, John-Paul, picking up on that I see more frequently, and yes, absolutely on mortgages, that is a huge issue. But one of the things I see more frequently that people don't seem to really know or have an awareness about is cars. Like, who signed the lease? Wife's going to get the car, but it's under husband's name because he had the credit or
Absolutely.
the loan. Husband they bought a car.
Yeah.
Nobody cares what name it was in because we're married, but now we're getting divorced. The loan's in my name. Well, unless you can take that loan over, I'm not giving you the car. Or maybe we have to come up with a way creatively to deal with that because your credit's out there, right? On any liability that your name is, any liability that has your name on it, post-divorce, you need to know whose name all of these assets and debts are in, because if, for example, that isn't addressed and you get divorced and the debt's still in your name and somebody defaults or destroys the car or does something, you're on the hook. Important to know those things.
Yeah, and Carolyn knows, can talk about this, a lot more in detail than I can. I think she has, some checklists or something that you'll go through. When it comes to things like that, assets that are really liabilities, what do you owe? What do you own? Once this becomes a possibility, you should probably start looking at, okay, we share this password, or we share a bank account, right? And he has all the password information to my personal private IRA or my personal account. It's on the checklist that Carolyn will talk about and hand out later. But just to get your mind working, what you really need to have going into this stressful situation, the best thing you can do is be prepared for everything, right? So that's going to make my job easier. It's going to make Carolyn's job easier. And frankly, from Jerry Maguire, help me help you, right? I mean, that's what it comes down to. We want to see you successful. So the more information you give to us, the better picture we can paint for you.
Absolutely. And what about income, John-Paul? When we talk income, I think everybody says, okay, wages. That's not the only income that many couples have. So what else is income?
Right. So getting back to what you had said on the tax returns, right? So if you get your tax returns, and I would venture to say most couples file jointly because of the tax benefits. Some don't. which is fine. But on the returns, on the tax returns, there are certain spots on the tax return where you can see supplemental income coming from possibly rental properties, things like that. So these are all assets that are bringing in income, and you may not have any idea. So, in terms of hidden assets, like we were kind of talking about before, you may be getting income from one of these assets and you have no idea. So it's always good to get that tax return. You give it to someone like myself. We can look at it and say, that this has been income, and oh, by the way, you've been getting taxed on this income. There's a lot of different levels when it comes to income, but in basic terms, are you working? Does your spouse work? Is one person maybe the homemaker for the kids, and the other person is out there daily, and doing, and making the wages? Is there a significant difference in the salary? If one income goes away, are you going to be able to live your current lifestyle? So all of these things, this is where it comes down to doing the inventory, sharing that information with someone like myself, so we can, have a conversation with the attorney. We can, get our ducks in a row and say, listen, this is what this person is going to need for, post-divorce. After analyzing her current income, that income is going to go away. This is what we need to fill in the gap. So knowing, what your sources of income are, knowing how much you make, knowing how much there is going to be a gap once the divorce is over, is very important to know this before you go into the divorce.
And John-Paul, on the sources of income, one of the other,
Yeah.
one of the other questions I have, and one of the other issues I often see, is clients come in with their tax return, but no schedules, no W-2s, no 1099s, no K-1s. All they do is bring me a tax return. And yes, I will see some of that in a tax return, but those schedules, those 1099s, 1098s, W-2s, K-1s, those are all really important for me to see. And so, because they contain other areas of income that you're not thinking about, that may not be directly or easily found in your tax return. And I say to clients all the time, if you filed a joint return and you don't have these things, and not all accountants will have them, but you can easily call your accountant and get a copy of your return. If you really don't even know where to start with for that, you can go to the IRS website and request a transcript of your jointly filed tax returns. You can do the same at the state of New Jersey and at least get a transcript so you have an idea. Yes, we will get those through when the divorce is proceeding. There is discovery. There are all those things. But if you want to start educating yourself before you get to the divorce phase, all of that can be done. And if you filed a joint return, the accountant has to provide you a copy. And hopefully all the schedules and the W-2s, 1099s, and K-1s, but they may not have them. They may not have retained them. So to the extent that you can find them and you have them, very important to get all of that information to the CDFA, to someone like John-Paul, and then ultimately to myself, because again, that provides me with valuable information that I might not otherwise find easily.
Right, that's right. And getting to your point with the K-1s, right? So, I have clients that they don't pay taxes. They don't file a tax return because they just own properties. That's it. That's their source of income, are these investments. So your spouse might say, we don't have any tax returns. We don't file taxes. I don't pay taxes. Well, I would say to that, do some digging, look through your mail, know what's coming in to the house, right? You should know what the mail is. Open up the mail. I know a lot of people, and I'm guilty included. I don't open up my mail in a timely fashion all the time. Sometimes it sits for a few days before I get to it. Open your mail, especially if you're going through a divorce and it's becoming a possibility and this is happening. Go through your mail, because these are the documents that you'll be able to find, that you didn't even know existed, right?
And even, by the way, John-Paul, at that point, even if you don't open the mail And listen, many people do things by email. You may not see it. It may come into email, but
Right,
if it comes into email to a family email account, just forward it to yourself so you know what it is. But I tell clients, and I told clients more a few years ago when we got more mail, take pictures of everything, every envelope that comes in. At
right,
least I know where to send a subpoena at that point. If you
right,
can't tell me what's there, I can identify them.
right.
We
If
have a
your name's
question.
not on it, yeah.
Yeah, we have a question from one of the attendees. How many years of tax returns and other documents? I would tell you and this will differ between lawyers and financial planners and any and other people that you ask. I like to start with 3 years. 3 years prior to the divorce, 3 years prior to thinking of the divorce. I like 3 years of returns. I don't necessarily need to start with 3 years of bank statements, but I like it. It's what I try to do to begin with most cases, just to tell me sort of where I'm going. I get an idea of spending. I can look at investment accounts to see whether any monies were really being added to those accounts. But I like to get 3 years. And certainly if I have a CDFA involved, which I try to encourage clients to do, I get them all of it and say to them, go for it.
Yeah,
And
I mean,
see
three
what's going
years
on.
is yeah, 3 years is kind of what I do, except there are certain situations like if your spouse left a job, 5 years ago, right? And maybe they had some stock options, or maybe, their 401k, whatever, is still there. A lot of this stuff, maybe contributions they're still making. So these are certain situations, but 3 years is typically what I'll ask for. If they have five, sure, I'll look at it. But 3 years, I agree, is a pretty good starting point. And then, after you do a little bit of investigating with your clients, certain situations like the one I just mentioned might call for, okay, let's look back a few more years and see what's up.
Okay. Last category we have, John-Paul, is expenses. And you talked a little bit about this, but I often say to clients, do you use Quicken for your, does your spouse use Quicken or any other app or something that monitors expenses for you? Get access. If
Right.
it's you, download it. I mean, maybe it's not perfect, but it's a heck of a lot better than people taking what I refer to as a WAG, as a wild ass guess about what your expenses are. If there
Right.
is some source that you have access to that will provide you this, get it. Give it to the CDFA. They can refine it as need be, but it's at least a good start. And if you have nothing, well, then you might want to start gathering bills, right? I mean, I hate to say it, but I've had clients call PSE&G and to ask them to send a transcript for the last 2 years of their gas, the last 2 years of their electric from JCP&L. Look at their credit card. If you have a credit card that gives you a year-end summary, I'm going to kiss you because that is so helpful. Many of them now do it, but years ago they did not do it, and it was a nightmare. But that at least gives you, if not pinpoint accuracy, broad within like striking distance of what it is. But then you take that to your CDFA, and they're going to refine it.
Yeah. So just a little shameless plug here with Bank of America. If you're paying your bills from a checking account, it tracks all of your expenses. It tells you exactly what you're paying to whom and where.
Yeah,
So
that's
it's
awesome.
it's
I
like a
didn't know that.
built-in.
See, I'm learning something, John-Paul. That's awesome. I'm going to tell my
Yeah,
clients,
it's
Bank
pretty.
of America for that reason.
Yeah, it's pretty cool. I have to actually, check my wife on some things and be like, I see it, right? Like I know what and when, and what the exact categories that she's spending a little bit too much. And the good thing is actually, and that is it tells you where you're overspending depending on how much you make.
Right.
So that's a helpful thing.
Right.
So yeah,
So
when it comes to expenses, I'm sorry, Callum.
no, that's fine. Go ahead.
I mean, essentially, do you know how much you spend a month? Most people don't. They say, okay, if I have money in the checking account, I'm good. So they don't know how much money that they actually spend. I guarantee that if each one of you had, you tracked every dollar you spent, you would be extremely surprised at the end of the month. I'm talking about, the not just like, your gas, the little things are the ones that add up, right? A chocolate bar, or,
Yep.
you buy a sandwich on the way home from, work, or whatever the case may be. You add that up, it's going to be a significant amount, I can bet you.
And I will
So
tell you, I have many of my clients when I make them do this exercise, because we have to complete what's called a case information statement. So I'm not telling you to gather all of these things in part because it's fun and it will create work. No, I'm gonna have to produce to the court a document called a case information statement, which is going to set forth all of this. And I refer to that as your financial Bible, because that is how this court is going to understand your family financially, and from assets and debts and otherwise, but your budgets and what you need. And it is very important. So, but I will tell you, when I've had clients do this, they're often shocked at how
yeah,
much the little things are being spent.
yeah, it adds up. I mean,
Yep.
you know, it's silly to say, but I mean, it could add up to, your car payment, and you don't even realize it because it goes a little bit every day. You're spending these little amounts, and at the end of the day, maybe at the end of the month, maybe it adds up to $300, $400, whatever the case may be.
Right.
But I mean, the point is with these expenses, just have an idea of what you're spending. And especially when you're going to be going through a divorce, being prepared to say, this is to the dollar what I spent the last month. You know, Carolyn and I love that, right? So, I mean, it
Right.
just helps us do our job better. It helps me, when I'm gathering this information, it helps me answer questions, before they're even asked. Like, when Carolyn's in the middle of her negotiations with the client, do you know how much support you or your ex-spouse needs and for how long? This is gonna provide, you're gonna have an answer to that after, we collect all of this data. Do you know how much you or your ex-spouse can afford to pay? These are all things that when you're prepared and give these documents to us, it's just gonna help us help you. So these
Agreed.
four categories are probably the most important aspects of preparation for when you get a divorce. You have anything else to add, Carol?
Nope. Let's go and
Okay.
talk about some of the assets.
All right. Property. This I know Carolyn can talk more about the legalities of this, but some divorces do settle 50-50, but it can make a huge difference which 50% you get, right? In other words, all assets are not created equally. For example, I have many clients who come in and they're determined to keep the house, right? However, if they can't afford the maintenance and the upkeep, they may be forced to sell the house sooner than they anticipated, and then who do you think pays for the closing costs? Right? It's gonna be you. Um, you know, you're responsible for 100% of these costs, which could have been shared with your spouse, if you had sold the property at the time of the divorce. Um, and what if you're forced to sell at a time when the real estate market is down? Right? These are all things that you need to start asking yourself. If you want to keep the house, you have to determine if you can afford to keep it. You need to know the answer before you sign on the dotted line. If not, this is a decision that, down the road, it can cost you heavily, or, I've seen cases, and Carolyn as well, probably force people into bankruptcy. I mean, it happens, unfortunately, where, someone was determined on keeping the house for sentimental reasons or whatever. And you know
The
what? They
kid.
get left. Yeah, exactly. And I get it. I get it. We get it. But, you also have to understand that there's financial impacts to these decisions. And, a lot of times it just does not make sense to keep the house. Not in every situation, of course not. But these are things that you need to know. So I just wanted to briefly go over some of the basics with regards to property. And, the first thing, again, this is Carolyn's area. I'm going to briefly mention it. There's two kinds of property, right, Carolyn? There's
Correct.
marital, there's separate.
Correct.
Anything marital is going to go into the marital pie, so to speak. That's going to be equitably divided. Anything that's separate property will not. The distinction between the two, like spousal support, is another gray area, and it needs to be discussed with your attorney. I can spend a very little amount of time explaining, how the courts typically, define this property. So the separate property is anything that was gifted during the marriage, inherited during the marriage, or brought into the marriage and kept in either spouse's separate name.
So I can clarify that a little bit, John
Yeah,
Paul, so they have it, but I agree
absolutely.
with you. I mean, anything that's an inheritance or a gift in the state of New Jersey is going to be an exempt asset. If you can trace the inheritance, if you can demonstrate it was a gift, your great aunt, your parents, your sister gave you $5,000, $10,000, and you put it into a separate bank account that's in your sole name, it's out. If you had money coming into the marriage, and the most common one that we see is that people have retirement accounts, they get married later in life, and they have retirement accounts that they have been investing in during their not married period, their premarital period, then whatever is premarital, whatever you had in that account that was premarital, plus whatever was earned on that premarital account, which will require you to have an actuary or someone else do that calculation, is exempt. It's premarital. You get to keep that, but it's your burden in New Jersey to demonstrate that's the case, and you better have all the documents in order to do that. I say to people who are younger than I, that I know, my nieces, my nephews, I said, just before you get married, why don't you just print out a copy of a statement for each of the accounts that you currently have and save them somewhere, just in case.
Such a good idea.
Right?
Yeah.
I mean, I know that's sort of hard at this point to have this conversation, and we're going to talk a little bit about that, because one of the things I said to John-Paul that I struggle with as an attorney, when I have clients who come to me and say, well, I've been married 15 years and I had 100,000 in this 401k when we got married. Okay, but can you prove that to me? Like, can you show me that? Do you have proof and evidence of that? Because most financial institutions they're required to keep records back 7 years. Did you move it? Did you start at Johnson and Johnson? I keep using them, but you started there and then you left there and you moved it into an IRA, and then you moved that IRA into a different IRA,
Right.
or that financial institution became Bank of America, became Merrill Lynch, became Goldman, whatever. And now you've got to trace it through all of that. Even if it's within the 7 years, now you've got to get 7 years of statements. So I tell people, if you have premarital assets, or you have things that you think you owned premaritally, please immediately go order the records. Go get them as far back as you can get them, because you may find out you can't get them. And it's different. I have come to learn, and I don't profess to know all the financial institutions, but I tell them you can do this in one of two ways. Go get the statements, or see if you can get a transaction history, because sometimes you may luck out and get one back further than 7 years. But do that now. And so, John-Paul, how do I do this? I mean, I'm the lawyer. I'm just telling them, please go get the statements. Please go get all of the information for everything that you think that you had 20 years ago, 25 years ago, 15 years ago when you got married. Please go. It's your burden. You have to prove it. So please go get it. How do they do that?
It's not, I mean, I'm not going to sugarcoat it. It's very difficult. So, I mean, I have clients that transfer in assets to me all the time. And, I have to get on the phone. If they don't have statements from, before they were at Charles Schwab, but before that, 5 years prior, they were at Fidelity. You know what? Guess what? Charles Schwab, we're only getting the history from Charles Schwab, right? We're getting the cost basis of those investments from where they're coming from. So I have to do my homework and say, okay, and I'm going through this right now with taxes for my clients, because I have to, end of year tax things. I have to, buy and sell, offset capital gains, and I have to backtrack. I have to call, places like Fidelity, and, I have to have my client on the phone. So this is something that I do with my clients. We have to do the work. You have to call them, and you have to kind of have an idea of, where were the assets. So like, Carolyn said, it's good to, as soon as you start seeing this possibility, start tracking, right? And unfortunately, there's no easy way where, there's a click of a link that's going to say, this is your history. If you have different financial firms that these assets are coming from. I mean, most people don't stay at one job their entire life. I think the average is five different places of employment through one's lifetime. So, if that's the case, then you have 5 different plan sponsors for retirement accounts that you're probably going to need to contact. It sucks. I have to do it all the time. There's no other way to do it. So, and that takes a lot of time, right? It's taking time out of your day. You have to hope that the other person at the financial institution is not a bozo and they know what they're doing, because that's not always the case when you talk to the back office people that are accessing this information for you. I do it all the time. I deal with it all the time, and it's going to take a long time for you to get all this information. So, like Carolyn said, you should start as soon as you possibly can. I wish I had a better answer for you, but it's a lot of work. It's definitely a lot of work.
Okay. So what else do we have to talk about? Marital property, right?
Right. So, where was it? Okay. So, getting back to kind of, what the separate property, you have to be aware. I have a friend, Sarah, that got married like 10 or 15 years ago. She was, in love. What's mine is yours. What's yours is mine. They signed, they had a house, she had a house, and then they, both signed the deed. She put his name on the deed. And guess what? That's called a presumptive gift, right? And, to the marriage. Now the house is likely to be part of the marital pie. That's going to be up for division when she's going through her divorce. And, that diamond ring that, the husband bought her, right? If it's a 10-carat diamond ring, maybe he says, hey, that's not a gift. That was an investment, right? I know Carolyn probably sees this all the time when she's talking to her clients.
Except that there's case law directly on point that says the minute you get married, that's my property.
Oh, is there? Oh, okay.
Is.
So that can't be touched.
Not an investment. It's a gift.
Oh, okay.
Gift in contemplation of marriage, and once we get married, it's mine.
Oh, that's my bad. I thought that was still up for grabs. Sorry about that.
That's okay.
Why I'm going to stay in. That's why I'm going to stay in my lane.
Right.
But yeah, what about Carolyn, like an inheritance? So if she received an inheritance from her aunt, she left it in a trust account in her name. That's going to be separate, correct?
Right. That's simple. But let's talk about the more complicated issue, which is what I often see. Great Aunt Gertrude gave me $20,000. I put it in a separate account, but we wanted to go on this vacation, so I took 5,000 out and I paid for vacation. Or we wanted to send little Susie to this camp over the summer, so I took 4,000 out and did that. Well, what's left is probably still yours, but now you're not getting the other 9 back. You put it into the marriage. Or even better, I got an inheritance from my uncle 2 years ago, 2 years prior to the divorce. It was $100,000. I put it into the joint account. People then begin to make arguments about commingling or gifting, and it's hard.
Right.
It's not cut and dry. There are arguments to be made. It is not black and white at that point. It's black and white when I put it in my name and keep it separate, and I never commingle and I never do anything else with it.
Right. And even if they didn't commingle it, what if the asset value grows?
All mine. All mine. If it's not commingled and I took that money and bought Apple stock 15 years ago and it's now worth $500,000, all mine.
Oh, yeah. Okay. All right. Yeah, because I know that's another tricky part where people get confused about, where, I kept it separate, but since it's grown since then, is it part of the marital property? Is it separate property? Right.
Remain separate. There's all kinds of arguments about that. There's arguments about premarital purchase of a home and, increase in value that's due to just market factors and not active, investment or active working to make it worth more. Passive increase, marital, active increase, probably exempt.
Yep.
And then that's hard because then you have dueling appraisers talking about what it was worth then, what it's worth now. What was it, the investment that made it worth more, the capital improvements that made it worth more? Was it just the market? You can spend a lot of money, diving down into that issue. So,
absolutely.
Next slide talks about marital. I'm just trying to keep an eye on the property.
Yep.
We've talked about
Yeah, I
that.
know.
Marital home, we've talked
I'm
about
gonna
as well a little bit, right?
Yeah, so I mean, anything like we were just talking about that's not considered separate, it's marital, So
Correct.
as long as, right, so like let's take for example like a 401k contribution that comes out of my paycheck, it goes directly into the XYZ fund account in my name. Is that marital or separate, Carolyn?
If you earned the income during the marriage, it's marital.
Right. And how about my wife's pension?
And if your wife was investing in a pension during the marriage and deferring a portion of her paycheck, that's marital.
Yep. So these are all things that, we, as a CDFA, as an attorney, we need to know these things prior.
Right.
Um,
So next slide, I think you have, yep. So we sort of talked about this a little bit. So I don't know that we need to spend a lot of time on it. The
yeah,
retirement accounts is next. That I think we should spend a little time on. And I know we've got about 15
yeah,
minutes.
yeah. So retirement accounts, there's a lot to talk about. I'm going to try and be as quick as I possibly can.
Listen, this is just meant to be an overview, right, John-Paul? It's okay. We're
Yep.
just trying to get people ready for this. These are things we're going to have to talk about, as we progress in divorce. So the idea is, what do we need to gather? What are some things to consider about retirement accounts as you're gathering the information, as you're beginning to start thinking about a divorce?
Right. So, there's different types of plans. The easiest plan to understand is the 401k, right?
Yep.
It's a defined contribution plan. As an employee, you and your employer put pre-tax dollars in, sometimes it's after-tax dollars away into these accounts, and they grow income tax deferred until you're ready to retire. Usually they can't be accessed until you're 59 and a half without incurring that 10% penalty fee. When you get divorced, when you're preparing to get divorced, however, there's that window of opportunity, right, where you can access your account, your spouse's account, before retirement without triggering the penalty. Um, if you need like liquid money up front to cover cash flow needs, this is an option that you can consider. And knowing all this stuff beforehand is going to help. It's going to help me. It's going to help Carolyn. Before you make these hard decisions.
Okay.
Here's just a quick example. I helped a client figure out that she needed 80,000 in cash from her husband's 401k, so she can maintain her cash flow over the next 10 years. Right? She was awarded 150 from her husband's 401k. She requested a one-time distribution of 100,000, and the remainder would be transferred tax-free into her own IRA. Now, the IRS loves looking for a piece of the action when it comes to divorce. So they withheld 20%, right? So 20% of the 100,000 they get to keep of the distribution. But she
Because
avoided the
it's income,
penalty.
right? Because it's income.
Right, right. Yeah, I mean, when in pre-tax, the IRS always got to get their hands on it. So you're getting taxed on the way in or on the way out.
Yep.
But here's the thing: if she decided the following month that she needed another 10,000, well, oops, that's going to be too late, because once it goes into the IRA, right, it's done. So if you're using this option, you need to be sure of the exact amount that you're going to need. And by the way, you can't do this with your own 401k. It can only be your spouse's 401k where you
Correct.
have this window of opportunity.
And John-Paul brings up a good point. Sometimes you want to look at those things and say, well, we have $1 million in our retirement accounts, and I have $1 million, he has $1 million, and maybe, I'm going to keep mine, he's going to keep his, but we have college coming up. Maybe then what we should do is divide a portion of mine to him, he divides a portion of his to me, the same amount of money, pull money out and put it into a fund to pay for college if that's upcoming. I've had clients do that, but you need to have most lawyers are not going to know to do that, but your CDFAs, your financial planners are going to know that. And that's a creative solution to generate cash flow. So again, that's why it's very important to gather, what do you have in a 401k? Is it an IRA? Is it a pension? And not all pensions are the same for us to divide. Some of them, most nowadays, are cash balance, which is a particular type, but many that we still see from time to time are the old fashioned, like it's a pooled money for the pension. You're not getting that money now, so
Right.
you need to look at those things. You're going to wait until your spouse retires in order to get a piece of whatever he's getting. So And that's why I say to people, you need to look at these, tell us about them, get all the information that I talked about earlier, because these are going to be important things for you to know, to develop some options for you if you need some options, to either offset another asset that you want to keep or to create a cash flow. All of those things are things you're going to discuss with the CDFA, because there are many opportunities.
Yeah, absolutely. Talking about, pensions, as we just discussed, you can't actually access that money from a defined benefit plan or a pension until you retire. So what could be wrong with that, right? Well, if part of your divorce settlement says that you get half of your spouse's pension at 65, but you run out of money at 50, I mean, maybe the better option would be to utilize someone like myself, and you obtain a present value of that pension, right? And then you could receive other assets in exchange for that. Maybe that would jeopardize your ability to retire comfortably at a reasonable retirement age. Again, every situation is going to be different. And you want to be able to use an advisor to look at your specific needs and run a wealth analysis with all of these things in mind, help you choose the right options. Having someone like Carolyn or a CDFA, is going to be absolutely invaluable in forecasting some of your needs. The point is, you need to know how every decision is going to impact your entire financial picture, and you need to be prepared to talk about all of these possibilities.
And you need to have someone who's going to be able to help you when what you think the settlement's going to be is not what the settlement's going to be.
Right.
Sometimes you've got to be able to pivot and know whether now what's being discussed actually works for you. And that is not something your lawyers are going to do. I mean, some may be able to help out, some of them, but most of them, that's not my wheelhouse. That's not for me to decide for you. You need to have someone who's going to give you some options and advise you so that you know what you're going to be able to do.
Yeah. I mean, these are all things that you need to know going in, and these are the things that are going to come up. Your attorney is going to ask you for, or these are the situations that are going to come up. And if you're prepared, it's going to be okay. I got this. We know what we're doing. We know how it's going to work. But there's issues dividing up the retirement plan sometimes, right? As we talked about, accounts, retirement accounts are considered a marital asset in a divorce. Whatever accrued in those accounts during the time of marriage can be divided, right, Carolyn?
Yes.
Every time, yeah.
Whatever's from the date of marriage to the date of the complaint is marital and will be divided.
Yeah, it's a common issue when dividing a pension and retirement accounts is when, let's just say, one of the spouses worked for an employer for a long time, possibly before they were married, and they want to keep the pension at all costs. So, for instance, the person may want their spouse to have the house instead, right? That comes up. The pension needs to be valued, right? So, so it can compare and offset, the house value. The valuations are done by specialists like myself, to determine what the present value of that pension is actually going to be. And this is a term that, Carolyn and I were talking about before, is coverture, right? And it is, it's used to calculate the marital and non-marital portions of certain types of assets in a divorce, including, pensions and stock options. And I'm sure this is something that you run into all the time, where someone has a pension, they don't want to let it go. They'd rather offset that with something else, and it needs to be valued.
Right. And sometimes I say to clients, you don't really want to be bought out of that pension because at the end, it's more valuable to you than the cash right now. But that's
100%.
But that's not something that I can give you pros and cons about. You have to talk to a CDFA or a financial planner. Okay.
So, I mean, really, this is just to sum it up is, you need to understand where you're at right now today. It's gonna make your life a lot easier during the divorce, so that there's, it's already, a stressful situation. You don't want surprises, right? During or after, everything happens. You want to know exactly what you have, what you don't have, what you owe, what you don't owe, what your options are going into it. And what that's going to do is that's going to empower you to make better decisions. It's making you more informed. It's going to give you, probably a better settlement that's going to help you move to your next phase if you are armed with all of this information.
Yes.
So, I mean, that's it for me. I want to thank
Okay.
Carolyn, allowing me the opportunity to speak tonight. I know we spoke a lot,
We
and
did.
yeah, I
So I
spoke too
have
much
just, there's
probably.
just one question I didn't answer. And so I wanted to be able to do that. And the question was, if I'm the one paying all the bills, but my spouse works and I don't know where their income goes, because like my income is what comes in and pays all the bills, is that a problem? Well, it could be, because, if that money is going out and they're spending it on all kinds of stuff that they want to spend it on, but it's not really helping with the marital expenses, maybe that becomes an alimony issue. And if they're not spending money on marital expenses and they're spending it on things that are not, or it's going away, then they're not accumulated a savings or an asset that you're going to be able to divide, right? So they could just be frittering that money away. And the court is probably going to say, well, you should have known where it went and you should have kept an eye on it, because I can't make money come back unless it was spent on non-marital, like with like paramours. You're giving money away to family that nobody knows about. Maybe if there's an argument for dissipation, maybe. So, there are things to do, but can it hurt? Sure, because if they're just, you'll forgive me, frittering away that money, you're not getting it back, right? And now you're the one who's viewed as a supporting spouse when the court's looking at alimony. So, that's the concern. Um, I think that's it. I think we've answered all the questions. I don't think anyone else has any questions. If you do, jump into the chat. Otherwise, I really want to thank John-Paul for joining me. I think this is really valuable for people. I'm going to share just for a moment so you can see. You will be getting this after this. I think this is correct. You're going to be getting this checklist, which is a great checklist, and that I put together specifically for this presentation. I'm sorry to be scanning quickly, but it's about 6 pages. And those of you who are attending will get it, which will help you gather documents to help your attorney, your CDFA, and to help you help yourselves, really. And what I tell clients is the more you gather this stuff yourself and put it together neatly for me, the less time I waste going through this. I cannot tell you, I have cases where I chase clients for documents. You're paying me to do that. You're paying, whether it's me or my paralegal or my associate, try to gather it. Give it to me. If I'm missing something, I'll tell you, but I tried to be as comprehensive as I could in this checklist. I'm sure there will be things that I missed, but the answer was I sat down and thought about what is it that if a client walked into me and handed to me at a consult or at the first meeting following their retaining me, would be great. And I've had probably 3 clients in my 26 years of practice who have walked in with a notebook with all of this and more. And they have been like my favorite clients, because now I can actually look at it, start analyzing it. If they hire a CDFA, and there are people who do this. I mean, John-Paul is one of them. I know many that are going to help and assist and run scenarios. Yay, I can just hit the ground running and I'm not wasting time or your money. And I think that to me is what is most important, that at the end of the day, if you can do this much more efficiently, less emotionally, the better it is for you and your family and the more money you will save. So with that, I'd love to thank you all, and keep an eye out for the email that will come with that information and the webinar. And I wish you all good night. And thank you again so much for tuning in.
Good night, everybody.